Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 13th of June 2020, and we're publishing our gold and silver weekly update for the week ending the 12th of June. Gold rose $46 last week, from $1,685 to $1,731, having hit a high of $1,745 and a low of 1,678, reversing exactly last week's fall. In sterling terms, gold finished the week at £1,379. That's up £49. And in euros, it closed at €1,537. That's up €44. Now, silver rose just 6 cents, from $17.45 to $17.51, having hit a high of $18.21 and a low of $17.34. In sterling terms, it closed at £13.96. That's up 18 pence. And in euros, it closed at €15.56. That's up €0.11. Now, the gold to silver ratio actually rose last week from 96.5 to 1 to 98.8 to 1. Now, the Dow Jones closed on Friday at 25,605. That's up 477 points on the day, but that followed a very significant fall the day before, and so overall the Dow was down for the week some 1,505 points. Now, the S&P closed at 3,041. Now, that's up 39 points on the day, but again down 152 points on the week. And the Nasdaq closed at 9,588. That's up 96 points on the day, but down 226 points on the week. So once again, as mentioned, there was a particularly bad day last week for the equity markets, and that was on Thursday. Now, Brent crude closed at $38.73. down $3.57 on the week, and WTI crude closed at $36.26, and that is also down $3.29 on the week. Now, the dollar index stands at 97.31. That's up 0.38 points on the week. Now, interestingly, it had been much lower during the course of the week, but seemed to have recovered towards the end. Now, our last 3 videos are, if you haven't listened to them, quite capable of having encapsulated what happened during the course of this last week, we would say pretty well. They're entitled Government Stimulus and Stock Market Tops, Gold and Silver Rises, Fed Warns of Slow Road to Recovery, and US Equities Crashed, but so did silver. Now, between these, we pointed out that some analysts were of the view that US equity markets in particular may have reached their short to medium-term tops, and that one should not be surprised to see them dip or fall back from those levels. Also, the Fed having promised no end to its stimulus and that recovery would be slow and gradual, both buoyed up and curbed the equity markets. Now, gold was perhaps the major gainer in this, and silver is currently suffering its schizophrenia in that its industrial demand component has been working in the opposite direction of its monetary demand component, particularly this week, as each piece of economic news has been announced, leaving silver within our now long predicted price range of $17.50 to $18.50, with $19 and $17 being outlying peaks and troughs, or resistance and support. Now, looking at gold from a technical analysis point of view, prices remain above the support trend line of $1,730. There is additional support at the 10-day moving average level of 1,717 and at the 50-day moving average level of 1,709, which is why, to some degree, we can be moderately confident that it's going to take quite a bit to push gold below 1,700 at this stage. It's not impossible. We saw that last week because we did have a low of 1,678. But again, our view is 1,650 is probably a very, very strong support level. And 1700, it does take a little bit of doing to get through that. Certainly for more than a day or so. Now, both short-term and medium-term momentum have turned positive, though the fast stochastic is 86, which is higher than what is currently and normally regarded as the overbought level of 80. So that suggests a potential price correction in the short term. Now, technically, silver is suggesting a high degree of volatility, with the potential of a shooting star being formed, but within an area of consolidation. There is strong support at 1750 and heavy resistance at 1850. So we're still happy to continue with our now rather boring prediction of 1750 to 1850, with $17 and $19 being outliers to those. Now, last week we summarized our update with the following words. So in conclusion, we expect silver still to oscillate in the 1650 to 1850 range, with the most likely range to be between $17 and $18. Gold, we expect on the outside for it to oscillate between 1600 to 1750, with 1650 to 1750 being the most likely measure. This may change depending on geopolitical issues and or what the FOMC announces on Wednesday. Otherwise, consolidation is the most likely recourse. Now, last week we saw that the consumer price index for May was minus 0.1%, compared with minus 0.8% in April. The producer price index was a positive 0.4%, compared with minus 1.3%. And the initial jobless claims were 1.54 million, compared with 1.9 million the previous week. So this means that total continuing jobless claims is in the region of 29.5 million. Quite a significant figure to recover from, which, as we have said in previous videos, in our view, is going to take years, not months. So let's take a look at what's being reported next week. Well, on Monday we have the Empire State Index for June, Tuesday retail sales for May, industrial production for May, and business inventories for April. On Wednesday we have housing starts for May and building permits for May. Thursday, initial weekly jobless claims, as always, and then leading economic indicators for May should be interesting, and the Philly Fed Manufacturing Index for June. And on Friday, the current account deficit for quarter one. So Tuesday is perhaps the most impactful day, certainly in terms of the range of data available, but of course all eyes will also be on the weekly jobless figures, as that has attracted most attention. Now, we suspect that next week, this coming week that is, geopolitical factors are more likely to affect markets than economic ones necessarily. There is still concern currently at the increasing hospitalization rate found in some states, and a fear that COVID-19 may be on the increase again. And this, if it is true, will undermine markets because of its potential effect on businesses being able to open and operate efficiently and to full capacity again. So, as far as gold and silver is concerned, much of the same really next week. Though we do have other central banks outside of the US making declarations and announcements and reports, and we shall see how these impact on both the dollar and precious metals. That said, with Europe and the UK committed to additional stimulus, we suspect that there could very well be a further strengthening of the dollar, and we stated, I think, yesterday's video, we are expecting the mean to go back up to about the dollar index to 98 from its current level, which was then 96. And even though, and it's really important to point this out, even though equity markets may indeed falter, do not necessarily assume that that will mean short-term gold and silver prices will rise. Because, as we mentioned again yesterday, very often when markets fall, then investors have to cover margin calls and losses, and often they do this by selling their holdings in precious metals. Not necessarily the physical ones, but certainly the paper ones, which, as we all know, have short-term certainly the greater impact on price. So other than that, do share your thoughts. Thank you for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Now, we do update our Richard and Greg channel every few days. It has been a few days since we updated the last one due to both Greg and my, frankly, not being able to get together as much as we would have liked this week. But there will be an update over the course of the weekend. We trust and hope you have an enjoyable and safe weekend. And, as always, a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.